Did you know people who earn average incomes but possess a strong understanding of financial markets have a realistic pathway to becoming millionaires, and very often they achieve this milestone? Stay tuned to see the amazing results possible and how to achieve them. On the other hand, individuals with substantial incomes who neglect financial education often find themselves facing financial challenges, including bankruptcy. For example, a 2009 Sports Illustrated report estimated that an enormous 78% of NFL players file for bankruptcy or are experiencing financial stress only 2 years after retiring. The best-selling book, The Millionaire Next Door, found that people in high-earning professions such as doctors, lawyers, and dentists are twice as likely to underaccumulate wealth over their careers, as they often live a lifestyle of consumption and buy luxury items with an insufficient focus on financial assets that can build wealth. For more on this, check out our video on financial mistakes to avoid. Let's take a look at Jeff, who is an average earner but a prudent investor and has a long-term approach to building wealth. Jeff, however, has a full-time job and can't devote too much time to studying markets and every financial headline. Fortunately, Jeff is aware of two very important themes that underpin his passive strategy to build wealth. Number 1. The world continues to get richer. Between the year 2000 and 2010, the world's economy grew from $32 trillion to $74 trillion, an increase of over 131%. That equates to approximately 25% of all economic output in human history. The 20th century saw enormous technological development, with the advent of things as wide-ranging as antibiotics, nuclear power, air travel, and the internet. The trend of exponential growth shows no sign of slowing down in the 21st century, which has so far seen the advent of AI, cloud computing, smartphones, and 3D printing, just to name a few. Biotech firms continue to innovate, and their advances will likely see a vast increase in human life expectancy, with cures to major illnesses like cancer, heart disease, and dementia on the horizon. The world's population continues to grow. In 2023, the world surpassed 8 billion people. This figure is projected to increase another 25% and reach 10 billion by 2058. In addition to this, people are increasingly better educated. Countries like Singapore and South Korea were third-world countries as recently as the 1950s. Today, they have world-class education systems with highly qualified populations working in high-tech industries. This trend shows no sign of slowing down. A growing and better educated world population will deliver more economic growth and investment returns to those who are exposed to the right assets. Number 2. There is significant real inflation in the world. In 1971, President Nixon ended the convertibility of US dollars to gold, bringing an end to the gold standard. Since that point, the average rate of inflation in the US has been 3.89%. Let's put that into context. In today's money, you would need $7.83 to buy what $1 would buy in 1971. You will see similar long-term rates of inflation in the other major world currencies like the euro, Japanese yen, and British pound. Knowing how to calculate real return is essential if you want to grow your wealth. Luckily, the math is simple. For example, if your asset gains 10% in a year, while inflation is at 3%, your real rate of return is 7%. How does Jeff utilize these two themes to become a millionaire, and how can you too? First, when you think of inflation and compare it to average rate of return, many popular assets are far less appealing, and holding large sums of cash in the bank long-term is clearly a losing strategy. If the inflation rate exceeds the interest rate offered by banks, you are losing money. Since the financial crash in 2008, the US market has outperformed international markets led by big tech. Jeff, however, knows this moves in cycles, and that there have been multiple decades where international stocks have produced better returns than domestic stocks. The chart on screen clearly demonstrates this pattern. Anytime the line is above zero is when US markets have outperformed. Anytime it is below zero is when international markets have outperformed. As Warren Buffett famously said, there is always a bull market somewhere. How does Jeff implement this strategy? Jeff invests in exchange-traded funds. An ETF is a basket of securities that trades on an exchange just like a stock does. It can contain many types of investment, including stocks, commodities, and bonds. Jeff invests in ETFs that give exposure to the total US stock market, the developed economies of Europe and Asia, and ensures he has exposure to emerging markets like India, China, and Taiwan. The leading companies of tomorrow are not all likely to be US-based. Maintaining exposure to international markets improves the diversification of his portfolio and allows him to profit from growth and innovation worldwide. Jeff has automated buys set up on his brokerage account so that each payday his money is invested come rain or shine. This strategy removes the temptation to try and time markets and produces excellent returns over the long haul. Starting at age 20, Jeff commits to investing $250 each month. He is targeting a realistic average return of 8% and investing in his Roth IRA, which means his returns are tax-free when he can access the account at 59.5 years old. He commits to increasing his deposits by 2% each year, which is in line with pay rises he expects to make over his career. His account at retirement will be worth over $1 million, and the total amount contributed to the account over 40 years will be just over $181,000. This is the secret to building wealth long-term, a secret that isn't commonly understood. It requires little work, but lots of discipline. If you would like to make a start on investing, check out our 10 Essential Rules of Investment video. And if you would like to make the most of your hard-earned income, check out our video on financial mistakes to avoid. Subscribe to receive insights on your road to a healthier and wealthier you. Good luck!